What's up, JH? Mr. Murph, Oki, Members Body, Businessman. Businessman, I live streamed yesterday for FOMC. On Tuesday, I had to get my car repaired, so real life situations, you know? We don't trade FOMC morning. So yesterday, we weren't trading that. If you guys could like the video, I'd appreciate it. We're at 11. How does the screen look? Does everything look fine? God bless you too. Morning, Akbar. Thank you, JH. All right, with that being said, I want to make sure the volume's good too. Check real quick. I'm going to turn it up a little bit more. How about... I think right about here is good. I'm going to close my window as well. Excuse me. All right, should be pretty good here. Ready to rock and roll. Morning, Nick G. Long time no see, my friend. D Nice, what's up? What do I think Nasdaq's gonna do? It's a good question. I'm gonna rub my magic 8-ball and we're gonna see. What do I think it's gonna do? Well, based off of yesterday and what we've seen the last few days here, I was anticipating today, and we'll see if that comes into fruition today, whether or not we get this liquidity void traded into. So this here would be the focus of today, possibly. So currently, only thing that would be opposing that would be ES. And this may not mean anything at all. But ES has printed a SMT at the highs here alongside NASDAQ group. At least should I say NASDAQ has printed the SMT there. Does that mean anything? Not at all. SMT could just be SMT. We'll see how today trades, but overall, gun to my head, if things play out the way I would like them to, I would like to see NQ trade into this liquidity void, which is resting above us. So that green shaded box, the opening from this week to Sunday of last week, the closure, this big open gap right there, is what I would like to see price trade up into. At least the bottom end of it, 25-50% of it, that would be that'd be cool to see happen today. So those are much like a very strong draw on liquidity. It's a very strong magnet for price to want to gravitate towards. And if you've ever seen them, studied them, they're very, very easy to trade, at least in the beginning of the week. We're a little bit deeper into the week. It's Thursday, but that is all consideration with Monday with NVIDIA and everything that dropped. Morning, Will. Hope you're doing well. All right, let's get into watch some comments. So you saw how much ICT keeled the markets yesterday. Too much confidence. I don't know. let's get into what we've been doing. We're inside of this. I'm going to take away all this. We have a lot of previous new week opening gap, new day opening gap, previous new week opening gap. That's not so much in consideration right now, but previous new day opening gap. Overnight, we ran this buy side liquidity above this high here, which printed that SMT with with ES. So there is a small SMT there. Again, for those who utilize SMT all the time, it's not always true. It can be true for a moment of time, but if the narrative and the underlying bias is higher prices, it's going to completely disregard it. But that's the only thing I'll be looking for today is higher prices. There's no reason to look for lower prices. I'm only going to be looking for higher prices, only going to be looking for liquidity void to be traded to, only going to be looking for bullish models, so hopefully that's clear. It's pretty plain, cut, simple, and dry. Doesn't mean I'm going to be winning today. I could lose. Who knows? The price could do absolutely nothing, could go lower, but that's what I'm aiming at today. Usually when I have a clear draw on liquidity, something that's easy to find, and you want to be looking for days like this where you can go into a session and be like, all right, I have a strong conviction with logic that price should trade to this certain level, this certain area, and you're just waiting for time and stalking a model. That's all you're doing, just waiting for time and a model to print for you to execute on. That's all you're doing. And that's how most days should be. You shouldn't have to go in trying to hunt for a draw on liquidity, trying to force a draw on liquidity upon yourself. You should just go into a session and find it's not always going to be there, of course, but those are some good days when it's just kind of plain, simple, clear. It sticks out like a sore thumb. It's just right there in front of your face. It's like, okay, well, that's what I should be looking for, and just roll with it. And you also shouldn't have any fear missing out on it, because that can also induce the emotion like, okay, well, I really believe price is really going to go here. Well, that's also overconfidence as well. I don't know for 100% fact it's going to draw up into this area. A lot of your fear missing out has to do with overconfidence. You're overconfident in your ability or your skill set that you believe that whatever you have panned out in your analysis is 100% going to happen. You don't know that. I don't know that. And even if you do believe like this is going to happen, you still need to humble yourself and say, look, it isn't 100% guaranteed. I don't know for a fact, because what does that ironically do? Well, that ironically chills you out from fear missing out, because right now somebody could see this, well, price is going up, price is going to go up into that level, I'm going to miss the whole move, and you start freaking out. That's like, no. If you just wait for a certain model within a certain set of rules, which for me is going to be the macro, and if something doesn't pan out by then I don't do anything. So what do I believe the opening will look like and things like that? We'll have to see. Midnight open is here. 8:30 opens here. What I can say is, do I believe there's going to be a drop beneath this low in here? No. Why is that? Because we've already made this retracement, right? We've already made this retracement before the open, and I don't believe that there needs to be a deeper retracement than that. There could be, but at that point, I believe it may be invalid. Igor, thank you. So we have our opening range gap, which is here. I don't know if this is like I saw TradingView did a new update, but I keep getting these like red text things. Interesting observation. Well, yeah, to me, I mean, if we're looking at it, you always have to ask, I mean, why should price do something? We don't necessarily need a run underneath sell side. We've already done the run underneath this low, and that's about to make a bullish breaker if we get above, technically. We really need a closure above that high. We're sitting within that inversion on the 15-minute, stabbed into that bullish order block. We're kind of running off of that. So to me, we've already done the retracement. We've already done the run on the sell side. There's no reason to run lower. If sell stop's already been ran, no particular reason to run it again. My eyes. It could. That's why I'm always waiting for time. I mean, I don't know for 100% fact. If you guys are just tuning in, I appreciate it if you'd like the video with 31 likes with 120 people in here. So what I will say is a little bit sloppy prior to the open. I mean, this is a little bit sideways in here. We had an 8:30 news event driver. We've kind of gotten a little sideways in here. How do you wait for time? What up, Musa? Good morning to you. How do you wait for time? Well, patience. Not doing anything. I'm gonna start making some of these boxes different. D Nice, I appreciate you, brother. Seriously. Likes go a long way. So let's just say price runs deeper. It runs beneath this low in here. If it runs beneath that low, it would be probably to me a bit difficult for today to run to that liquidity void. It would probably take a lot of oomph to get there. We're a little bit deeper into the week, so I would like to kind of keep away from that low. Again, even if it runs that low, it doesn't. I'm not interacting with this until the macro, or at least until a silver bullet. CJ's life force sustained by Lexio. Correct. Brianus, good morning to you. Very, very rarely you will ever see me interact with price right off the open. Relative equal lows resting there, so we could possibly run those out. Could run sell side internally within that inefficiency. There's also an inversion that's right there. I'm gonna have to take away some of this. So yes, we're also diving down into the opening range gap. Just about 25%. I was just tuning in. If you could like the video, again, I appreciate it. So we have the sell side imbalance here. Now, I don't expect the sell side imbalance probably to be utilized. It could, but to me, this run is a run underneath the sell side, which is here, internally, which is inside of a discount, here, within that inefficiency, buy side imbalance, and this inversion. So does that mean I'm longing it right here? No, but I'm reading price. I'm trying to get a feel for if we're going to see higher prices today. We probably need to see it in here. Again, I said I don't want to see price run underneath this low. I've already determined that going into the session. I don't want to see that. We have relative equal highs, which are resting here. And this turns into an inversion, right? That's your first presented FEG there. You also have SMT at the lows with ES failing to make the lower low. You have any plans for any more educational videos? Yeah, I actually do. I'll have to produce some very shortly here. Take me a while, but I do plan on making some different content. So there's about to be an inefficiency that's printed here, and I don't find that bad. We're about 10 minutes after the open. But I've already discussed going into this session that it's a pretty high probability day so far, based on my drawn liquidity. The fact that I can see where price wants to lead towards, I'm favoring it very much. And technically this is a model, right? We've ran internal sell side within a discount. We've expanded away from it. We've gotten above a sell side imbalance, which is showing you a change in state and delivery. We have an inefficiency, which is here. So if it dropped in that inefficiency, I'd probably be willing to long it. Target the relative equal highs, target the buy side here, and target the liquidity void, which is above price. We've also, again, as far as the opening range gap, we've gone into probably more than 25%, which is good. You have to think of, like, if you're really favoring a side and price only gets into 25% of it, 30%, it's basically like an IOFED of the opening range gap. To support something else in here, at the lows, you also have SMT with ES failing to make that lower low, right? Only thing that's a little bit off, I would say, is time. But besides that, everything else is pretty good. So, got it in the inefficiency. That is the trigger. And I'm having a little bit wider stops in these conditions with a little bit less risk, to be honest. I'm having some wild swings lately. So this down close candle will be your bullish order block. That's like your last line of defense. The reason why I'm putting my stop loss down there, we've been having some really wild swings in price, and it's what I've journaled is like I need to have a little bit wider stops with less risk, kind of protect myself. And if price runs beneath this low, then the trade idea is wrong, obviously. But I've annotated and outlined audibly everything that I've looked for, and that's me following my plan to a T. If it doesn't work, does that mean I'm stupid, I'm dumb? No. It means that price was not willing to obviously trade higher today, or at least to what I'm expecting. But that's all you can do as a trader. I mean, that's literally all you can do. You plan your trade, you prep it, you do the right things, and you take the trade. Put the risk on. I'd be very surprised today if we don't trade to it. I mean, very, very surprised. It means this is a casino. I have some thoughts about that, for sure. I mean, I think trading is gambling in a sense. Yes, it's an educated probability and variable set. I don't know why there keeps being red boxes outlining my text. It's got to be the new update. So we're about to get into the macro, about 5 minutes. That should help speed price up if we do see higher prices. Noonie, W trade. Hasn't done anything. Somebody commented on my video last night on how to keep it set where I don't have to keep sending things back. Rhetorical? Yeah, and you'll see through my live trades on what to do. And I'll showcase it here today. So I'm actually going to take one off here inside of this imbalance in case anything happens, and we have another partial above that high. So right to your question, rhetorical, is anytime I take a partial, usually I end up moving my stops to break even, or I'm moving my stop loss up because I've already taken a partial, right? I've already protected myself, so I should hold on to something, or at least should protect myself. So I'm trying to talk and think at the same time here. So I want to see us trade above this high, and then we'll see if we can get into that liquidity void up there. So that's another partial, and then we're going to see if we can get into the liquidity void. Thank you, Nikki. Looks like these highs are a little bit different on the micro versus actually the NQ contract. Interesting. This is all easy. I said this from the beginning of the stream. I mean, I'm not going to sit here and like flaunt, because it's on days where the draw on liquidity is very easy. I mentioned it from the beginning of the stream. Just find a model and plug and play it, man. It's not rocket science. I mean, those who have been with me for a while, I mean, you all know. Jafar, I know, brother. I appreciate you. This is just easy peasy shit right here. I mean, this is like very low resistance snap. I mean, if you miss the move, you miss the move. But I mean, currently it's about 100 handles to the liquidity void, about 131. To go along with somebody's question as far as moving stops, I mean, I wouldn't leave this at break even if you're up that much. Like, you can obviously move things, but you don't want to choke it too soon. I mean, like something like here is fine. And they say there's no algorithm. And just also to make note, I mean, I'm not going to sit here and flaunt. And the last couple of weeks have not been great, but something where you can have, you know, a couple of these trades in a row hit, because they do hit, you know, a couple of these in a row. It makes up for all the losses. Like, seriously, it's not a... If you can just be patient and hold firm and have composure, it's really not that big of a deal. It's hard. I'm not saying it's easy. But, I mean, each of your stops are 20, you know, 20-ish handles, maybe 30. I mean, for me, I mean, this entire trade we're running for 130. Of course with partials, but it still makes up for it. So that was what, about 6 to here, 1 to 4. Brian, it's a great question. The reason I was saying yes before, well, particularly, I'm not hardlined on 10 a.m., but I'm hardlined most of the time on 9:50. But the reason why I wasn't today is because of, and I have to cover it, but the drawn liquidity A was extremely clear to me. We already knew where price was trying to reach towards, right? And two, I talked about this, and even Will, you commented this before I said it, is I already said that price has already done the work lower. Meaning before we've got into the open, we've already ran sell side, and we've already had this retracement into this higher time frame inefficiency, which would be the hourly, even looking at a 15-minute. We've already had this retracement. So if price has already reached into a discount before the open, and then we're expanding away from it, having shifts in market structure, and then having another dump lower, why should price run underneath that low? There's no particular reason, right? So it's already extremely primed. It's really, really primed for this thing to explode, basically. And that's why as soon as we ran this low in here, this internal sell side, and we start to shift higher, we're closing above this sell side imbalance, was showing what? A change in state and delivery. It's not respecting bearish order flow, and now it's going to turn it into bullish. Okay, what is this model? That's a 2022 model. Run on sell side, change in state and delivery, displacement, return into inefficiency, inversion, order block, expand higher going into the macro. Targeting what? Buy side liquidity above us and the drawn liquidity, which is the liquidity void. Right? In this instance, we're going to see here, I might just give this a little bit of breathing room because I'm pretty heavily biased on liquidity void to be reached into. Can I look at the sell side run as the manipulation of AMD? Yeah. I mean, AMD will only get you so far if you don't really know why it's manipulating something or why it's trying to reach for a certain target, or maybe a little bit deeper retracement I would prefer, to be honest. It's a bit of a dump off of that high being taken. I know rhetorical, you asked the question, but I'm just gonna go off of it. As far as like managing stops, you can take advice from other people, but it really comes up to yourself, what you feel comfortable with. I also think discretionary, meaning based off of intuition, experience, how to manage stops, like in a bit less probable conditions where I didn't really have a lot of confidence in the drawn liquidity, I probably would have already my stop and profit would have already been hit. But since I'm very biased on this liquidity void to be traded into, I'm giving this a lot more breathing room. And I'm allowing a lot deeper retracements, which means giving up profit, but at the same time, I don't want to be stopped out early. Again, it's up to you, your personality and what you like. Right, so. So I'd like to see the sell side imbalance turned over into an inversion. If it does that, then it'll be a good sign. We've just dropped down into this buy side imbalance, seen this reaction. We'll see if we can target this high right before the liquidity void. To throw on top of all of this, I mean, pay attention to what I was talking about with the opening range gap. I know a lot of people love to use the opening range gap saying it's got to get fully closed in or 50%, but again, everything I talked about and going into the session saying, look, even this acting as basically like an IOFED. Imagine this is a big old fair value gap. It's just going to IOFED the 25% of it and launch away from it if it's already primed to spool towards a drawn liquidity. A lot of gems in here for those who are willing to learn. Like that's, people ask, what's your model? What are you looking for? I mean, that's fucking it right there, man. That's a framework. That's a model. That's saw me execute it live. It's pretty on point there. Would you consider a scale in here? No. Why? Because I've already taken profits. I've already done my work. I don't need to go into more. If I miss the move, I mean, that's a different question, but that's the point, is not to miss it, I guess. So we've dropped down into this inversion. I would like to see the 5-minute stay as a breakaway. It can, drop into it as an IOFED. I mean, if for some reason we just completely collapse lower, it is what it is. But I'm just going to hold off for that to be traded to the liquidity void. It's a little bit deeper inefficiency, which is here. But it's a bit of a retracement. I'm just going to be honest here. That's pretty wicked. I mean, could this just be a run on buy side to where we drop lower? Possibly. But work's basically done. Does a 4-hour SMT not matter to you? I mean, it could be in consideration for sure, but SMT, sometimes it's just SMT. It's not really a, it's not true until I can see something unfold. Yeah, it's a wicked retracement. More than likely, stops are going to be hit. I mean, from here, unless we close back within this buy-side imbalance, then we're probably going to seek lower prices or something. I mean, this is where, to me, if I was trying to look for a trade idea and it completely does something outright differently, then you just have to kind of let go of the idea and either change it or just be done for the day. While I'm looking at this, well, I'll stop to break even. I was going to say this could be a potential bullish breaker, but it looks like we just wanted to run this buy side and failed to run a liquidity void, which does surprise me. I know it's early in the session, so I'll still keep reading this with all of you. But either way, that's still a fantastic trade. Even within that, it's still enough to pay bills and do what you need. And some people, again, are very static. They want to take no partials. They want to take out fully at a high. Some people like taking partials, holding on to runners. Some people don't like putting stops at break even or whatever. Again, trade management is completely up to you. I just show what I'm comfortable with. Is that outside my window? So this up close candle here, I want to kind of highlight it. And it's a very deep retracement based off of, if we were going to truly seek that liquidity void, I mean, we could still do it today, but we would have to kind of turn in here. We should have kept higher. We should have probably kept expanding towards that liquidity void. Jafar, I appreciate it, brother. But this pattern here is your bullish breaker. You have a low, high, lower low, and then you have your higher high. So price is dropping down into that. We could see an expansion away from that. But it's a bit of a retracement, man. That's real deep. Yeah, took the words out of my mouth there, fly. And if you look at that, that's wicked. We're still in some really rough waters, man. I mean, I guess I shouldn't have been as overconfident on that liquidity void, knowing the conditions, but for me, that's it. I don't need to go into the market anymore. the trade idea and everything was at least completed. And from here, I don't know. I guess I'll leave that on. If you look at ES, where are we at here? ES has failed to get above that high, and ES is already inside of its liquidity void. You miss this type of price action. Was there 10 a.m. news? Maybe that's what I misdialed today. I thought it was only 8:30. Orange folder. Yeah, it's... That to me is very seek and destroy-ish, meaning, I mean, from here, I don't know if I'd even want to operate in any of this. If I had to, like, let's say I didn't take that trade, I wouldn't want to operate in any of this. Because what we're doing in here is you're running sell side, you're running buy side here, you're running it above that high, and then you're dumping it lower and running sell side. Anytime you see both sides being ran like that, it's not great. Because after this math is done, then you're trying to operate in, well, which side is it really trying to run for? Because, I mean, somebody could look at this as a shift to market structure to run lower. This also could just be a run on sell side to run back higher again. And the likelihood of this being a clean run either way is going to be probably very low. From here, it's going to be either choppy, high resistance. That's all I'm going to state. But good thing for us, my work's done. I don't need to worry. It's over. If you guys can like the video, I would appreciate it. You only have 63 likes. There's 210 of you guys in here. Mr. Murph, pending home sales, big orange folder with real estate and interest rates. I gotcha. So we're dropping down into the new day opening gap and about 50% of the opening range gap. Again, I'm not going to sit here and say, like, from here, to me, this is very semi-low probability. No, I do not. He asked, if you have your daily target, I guess it's worded a little bit weird, but if you have your daily target and you took one trade but didn't reach your profit target, do you enter in? No. For me, again, I look at mental capital as a token, something that you can, a currency that you can spend each day and each week, and you only have so many of those before you spend it all. Much like you go to an arcade, you only have so many of those before you go until you do stupid things. And I know myself very well, especially if I'm up on the day and I go back in the market and I lose that, and then I lose even more. That ignites something within me that really pisses me off. And I know that about myself. It's the reason why I don't really, if I take one trade, for those who've been with me, that's usually all I do. You'll never really ever see me take a winning trade and then take another trade on top of it, because I know myself very well. I know that if I take a trade, I win to go back into the market. I never have that greed within me because I fear I fear myself really a lot. I fear the stupid shit I can do. So I guess that's also self-recognition. If you don't have that issue, I mean, that's all up to you, man. But I'd rather just take my money, walk away, and be done. It's a lot of work to sit through trades and prep for it and do it. And once you take it, it's like, okay, it's done. I'm relieved for the day. I don't want to have to go back in and have, I guess, that type of anxiety and worry again. Which I know a gambler's mindset, they don't think about the risk. They don't think about any of that. They just think about profit, which is not good. Mr. Murphy, yeah, so actually last night they sent me an email saying that since they're having so many delays that they're doing this, like, they're going to give me a simulated account that's the same as what my live account would be. And once it all gets resolved, any profit or loss will just be moved over. I didn't complain. I just said, screw it. I don't know what's going on over there. Demo probably has better execution. Yeah, I don't. Probably. I don't know what's taking this long. I don't know how. I mean, I've set up live accounts with TradeAway. It's never taken me a month to do it. So I don't know what their issue is over there. At the end of the day, I don't really care. As long as I get paid and I have the rules that I have, it doesn't matter whether it's live or fake. Probably is going to be fake anyways. Who the hell knows? Apex? No, my funded futures. That fast move, that move to the upside was a Judas swing. I mean, you could, right now, if you're looking at this market, this is to me very seek and destroy-ish. Meaning you've wiped both sides. If you wipe both sides of this market, and to me, I didn't really want to see it run lower. After that expansion higher, I wanted to see the liquidity void traded to before any sort of retracement, and that failed to happen. So I don't know what's going to happen from here. Anytime seek and destroy is put into the market, it's basically where I step aside. Because what's going to happen is we'll probably end up going into some type of high resistance profile. And if anything, it would have to be like a PM session type of day from here. Hold on, I just got a... See, I don't know if this is a scam. Your card was used in an Apple store for a transaction. If not done by you, call Apple support team. Is that fake? Let me look up this number. Apple number. I think this is a scam. I'll answer your questions in just a second. I want to make sure I'm not getting scammed or something. I think that's fake. ICT stated as SMT pre. What's your pointers in psychology? How do you maintain calm while in a trade? Common cap. That's a great question, but it's very long-winded. I think it's a lot of time and experience. It's a lot of repetitions. It's a lot of understanding that you have to follow a system and trust the system. Again, I'm not going to go on a huge rant, but The Mental Game of Trading, this book is basically the Bible to trading psychology in my eyes. I mean, it's seriously it's the shit. Also, not having a shit ton of risk on is also going to help you. You also have to look at, when you look at the fear of losing, and that's really the calm part, is what you're asking, is the reason people freak out so much is because they don't understand what they're fearing to lose rather than money. A lot of people think that you're fearing to lose the money in your account, when in reality it's not that. It's the fear of being a failure. It's the fear of, not impressing other people around you, or showing your parents, your friends, your spouse that you can actually do this, you can be successful. It's the fear of, not progressing fast enough. And every time you take a loss or you're in a trade, all of those anxieties are coming up to the surface, and that's why you're feeling all of that. So it's not just monetarily the money that you're losing or fear of losing. It's a lot of those other things. And if you become aware of them, it actually calms you down a little bit. But at the same time, you need to inject at the same time that, well, the market has no idea about you, has no idea about your dreams and wishes and your things you have in your mind, or what your spouse thinks, or what your parents think, or your friends. It's a whole bunch of shit. That's why psychology to me is the number one thing. It doesn't matter how much you know about these markets or the technicals. If you can't handle yourself, then obviously that's going to be an issue. And it's a work in progress. I mean, I'm still a work in progress. I still believe I'm still a work in progress. I don't sit here and claim that I'm a millionaire. Do I know what I'm talking about, and can I be consistently profitable? Yes. But I still believe I have ways to go and years of learning until I can really be where I'm at. And I don't think you ever make it in this game. To me, it's always a work in progress. That's just the way I view it. And I think if you keep that student mindset, then you're going to find consistency and profitability all the time. Once you think you've made it and you think you're the shit, and that's when I think everything goes to shit, because you're overconfident. You overlook your weaknesses. I feel these funded companies are oversaturated with traders and they're having a hard time with payouts, and that's why you see all these additional restrictions. Possibly, but at the same time, I mean, these funding companies are making buku money. Buku. Like, unbelievable amount of money. You would not believe the amount of people that have failed these challenges. I mean, and that constantly reset them. I think certain business structures, like my funded futures and Top Step, are probably the top two as far as structurally wise. I think they have it down. Even Top Step. Top Step's been probably around since 2010. They've been around a long time. But the main emphasis is to take all the money that you make and put it into a live account and build it and go from there. I mean, some people I see over Twitter all the time. I'm going to try to collab with his name's Brian Stonks on he's on YouTube, but he's also on Twitter. I see a lot of dudes that take advantage of these prop firms, and they run it up, man. I discussed this yesterday. I just don't have, I know my personality, I don't have the risk appetite for it. I mean, some of them have the bankroll to do it, where they're just buying 5 challenges at a time. Probably, I mean, any challenges I'd be over leveraging to get it. And then once they even get in a live account or funded, simulated, they're also over leveraging the shit out of it. It's not to say it's, in a sense, it's gambling. It's not correct risk management, for sure. But if you are willing to take the risk on correct models, like something like today, and you over leverage the shit out of an account, I mean, you could run up 20, 30,000. You could run up 100,000 real quick on these accounts. But how many times is that going to take to get you to that? I mean, you got to have a big ass bankroll to do that. So a guy talking about that 99.5% never make it to first payout. Yeah, that's when I got my first payout. I'm like, it's a huge accomplishment. Even for me, I mean, I accomplished something I don't think, and I mean, I'm just being honest, I mean, I hope all of you do, but I don't think 90% of the industry will be able to do. Like doing 30 300-hour days and keeping those accounts alive and getting a payout from them, I mean, that to me was a huge accomplishment. I mean, my private group saw me do that, dude. It was stressful. So again, even you're going through your losing streaks, I mean, you have to go back into your mind to say, look, these are the things I've done exceptionally well, and hold yourself well. As far as what price is doing in here, I mean, I'll just annotate it. Sell side imbalance here. I don't know what price it's reaching for now. It's kind of one of those points where I had an idea going into the session. I took the trade based on that idea. Price traded to the partially to the idea, and then it completely did something I was unexpecting. So from there, that to me means I'm wrong and I have to reevaluate or sit out. We're going to take this inversion here, which was a sell. Well, it's technically just a reclaimed sell side imbalance, which is there. We'll make that a little bit different. Green. Last year I got funded 4 times, blowing all of them without getting a payout. I mean, that's very normal. I've done that plenty of times, even when I was trading Forex. I mean, a lot of those companies I'd get funded and I'd end up blowing it. It's the way shit goes, my man. I mean, unfortunately, that's why this game's exceptionally hard. But if you took the trade, and yes, you'd be 100% right. Yeah, and that's why partials to me, being right or wrong is not important to me at all. And that's why I like partials, because I don't have to be 100% correct. I still got paid. So it doesn't matter if the full completion ends up correct. Don't fall victim into the, trying to be 100% correct. You're never going to get to that point of being 100% correct on your analysis, or that just turns into an ego dick swinging game, that doesn't get you paid, dude. I just want to get paid. That's all I care about. So if I can get paid and I'm not even 100% correct, who gives a shit? And there's plenty of times where I have an analysis correct, but yet the vehicle, the model, the destination, or at least how I get there is I end up getting stopped out. So being right or wrong doesn't matter. It really doesn't. As long as you get paid, it does not matter. Again, from here, this just creates complications, because if we were that close to that liquidity void and we failed to do that, and then we're falling back into this range, it's not great. Again, you have to remember the daily time frame is exceptionally unclear. So I mean, I can't trade these lower time frames, no, but it makes it easier when these higher time frames are a lot cleaner as far as direction. I mean, we've been stagnant inside of this range basically since December. We've been basically hugging this entire range. We're not moving away from it. We're staying within it. What does that mean? You're basically in consolidation on a higher time frame. What does that mean for lower time frames? It's going to be a lot more difficult. It seems a lot of people are spending thousands of dollars on funded accounts to get a payout, and they'd be better off trading micros than a small account. Most definitely. Man, I had, I don't know if he's on here, but before I moved here, I had a friend back home. He's older, but I had him put 10K into an account, and if you have that, obviously it's great. Some people don't, but he put 10K into an account last year in like March. And just following my trades and everything that he did, he got up to like 23 or 24,000 at the end of last year. And it was 126% return, which is ridiculous. And if you do a compound sheet, compound interest is insane. You do that over 4 years, doing the same thing. I mean, just from 10 grand, you're sitting at like $1 million or more. I mean, it's ridiculous. I know social media and all these funded accounts can really program you. But seriously, look at like use just a couple $1,000 account and building that over 4 years. Think about it at a university. I mean, dude, you'd be sitting really, really good in a few years. Only issue I would say with that, especially with me, is it is your own money. That's why prop firms and things like that. I mean, if all of that is used for trading, it's not liquid. You can't use it. For your own expenses and things in life. So that's the only issue I see with it. Igor, sorry. Can you check the daily time frame and look at the 2401 new week opening gap? We're still respecting it. Yep, we're still within that, Igor. I still am favoring higher prices. Until that liquidity void's reached into, I'd still favor it. Hi, any trades today? Yep, you missed it. You missed it all. You missed all the money, and it's never going to be seen again. Briannis, I'm 24, 25. Feel like I'm running out of time. I'm still trading down with 2.5 years into studying. Bro, I'm 25. And I know for all the older gentlemen in here, or women, let me put your 2 cents in. If you think he's running out of time, tell him how you feel. You're not running out of time, bro. 15 years from now, you'll be 40. Like, 15 years is ridiculous. If that means you have to work your ass off for 15 years, work a job while you're doing this for 15 more years to eventually get it, I mean, who gives a shit? Like, look, 39 here, still grinding. There's somebody in here that's 60. I mean, don't worry about time. Yeah, Nikki, 33. Mantis, I don't want to say, I think you're 40. I don't know for sure. Maybe 50, I don't know. Alex, 56. So, exactly. Thank you, guys. So, Briannis, if you look in the chat, man, look at all these people. They're all still grinding. They're all way ahead of both of us. Don't feel rushed. I love interacting with older gentlemen, man. That's especially that are trading, man. It gives me a whole bunch of confidence to keep pushing. If they're pushing, man, why the hell am I not pushing? I got all the youth on my side. I might as well use every ounce of it. I was just talking to somebody, one of my friend's kids. He might be in this live stream right now. I don't know. But I was talking to him yesterday on the phone. He's 18 and he's getting into these concepts. He's about like 6 or 8 months in, and he was saying the same thing. He's feeling rushed, and I'm like, dude, you're so young. Like, I started when I was 18. You're so young, so young. There's no pressure. Like, you could fail for the next 10 years and it doesn't matter. I could fail for the next 10 years and I'm still 35. I don't give a shit. But people put time limits on themselves, man. Romer, 18 and 2 years in. See, that's a blessing, man. And I was also blessed as well. I mean, to find this at 18, I was very, very blessed. Glenn, exactly. 20 Somalia, 2.5 years in, you're studying. That's great motivation for me, really am. Yeah, people, I think the industry doesn't help either. I mean, this takes a lot of time. Way more than people think. As far as price, I mean, it's getting a little bit weird delivery in here. I mean, I'm not biased higher or lower, so it would be very difficult for me to even want to short this. I don't know what I'd be aiming at. Could we trade down to these relative equal lows down here? We could, but we're still very close in proximity at liquidity void. We're inside of the previous new week opening gap here. We filled in about 75% of the opening range gap. Let me take a look at ES. ES also printed relative equal highs, right? Basically within its liquidity void as well. So I don't think that move's completely done and over with. We may not see it this week. We may not see it maybe tomorrow. I don't know. Nikki, most definitely. Social media is toxic. It makes us think we need billionaires in 3 months. Yep. I'm gonna be honest, man. I started this on 2022. I've watched a lot of content so far. You're the only one that made it clear for me, brother. I appreciate that, brother. It means a lot. Seriously. So, if you look at the stealing range here on the 15-minute, from this low up to that high that we made, we're dropping down basically into an optimal trade entry, right inside of this previous new week opening gap. So could this entire dump lower just be a really deep retracement before an expansion higher? Do I think this expansion higher into the liquidity void will happen today? I doubt it. I don't think there's enough time on the day. The reason why I'm still heavily biased on that is because it's a very strong draw on liquidity. They're not going to get this close to it and just leave it. That's just my personal opinion. Could it happen? Sure. But I just don't think that's going to happen. And if price was to run towards these relative equal lows, I also don't particularly see the reason to do that. Why should price do that? Just because there's relative equal lows doesn't make a whole lot of sense to me. And again, we never really had a full deep discount retracement. We never had a discount retracement within this dealing range. So from this low up to the high that we printed this morning, we finally just have reached into this discount. So much like yesterday, we reached into that discount on FOMC, and then we started to see that expansion. So we'll see. If we end up running towards these relative equal lows, I mean, I could definitely switch my bias. That's in real time. I could do it if I wanted to. The reason I would do it is if I saw ES really trading heavily towards the same lows, I could see we're no longer respecting, let's say, we're not trading higher at all, and something switched, then I would. But I would need a lot for me in order to switch a bias, especially that heavily biased. I think that's where a lot of my mistakes came from, is like I would have a bias in mind and then price traded somewhere different. And I would try to trade that side, and it would end up stopping me out and trading towards the way I wanted it. And it's like, well, I should have just stuck with what I had first in my mind. That's why I need a lot of criteria to switch. Hank, one can have all the knowledge one needs or wants. Knowing yourself is key for me. This game is designed with human behavior in mind. Exactly. I mean, it's why psychology is so, at least for me, I really key off on it, man. Bobby, but don't you think you are better trader than the person who used to determine the bias to get them choosing correct? Do you only trade NASDAQ? Yeah, I only trade NASDAQ. Have I traded foreign exchange before? Yes. That's what I started out with. That's what, before ICT became mainstream, that's basically all he traded was Forex. In 2016, 17, 18, 19, 20, when I was with him, that's what we were trading. So look at the reaction off of the previous new week opening gap. ES made a similar lower low. I don't believe the lows from FOMC will be traded to until that liquidity void is traded to. To me, that's a stronger magnet than the relative equal lows. Bobby, where would it stop you now if you were to reflect on them entries, and would you still take them today? I'm not sure exactly what you're asking. Are you, like my trades that I used to take? So you see how we got above this sell side imbalance? That's showing what? Some type of change in state and delivery in my eyes. I know the technical term of change in state and delivery is not that. It's when you're closing above down close candles. But when I'm reading order flow and we're getting above sell side imbalances, especially if I'm looking for bullish order flow, that's a decent sign. Does that mean I'd be taking a long in here? No. I would need a whole lot more evidence. Probably like getting towards this high up here to start looking for a long or something. Am I going to take another trade today? No. So those who are looking for another trade, I'm not. Now, the charter group knows one of the things I used to do last year, and I will probably utilize it this year, is if I am trying to pick off a low, which I don't recommend, trying to pick off lows or highs of an entire move is to me, it's a lot harder. You're probably going to end up taking more losses. But if I was going to, let's say in here, I would be putting 1 micro on, the lowest thing you can do, 1 micro. And as price moves in your favor and you see another model form, then I'm adding more positions on it. I'm pyramiding up into it. Because what that does is if I pick off a low and I'm incorrect, well, then I only get stopped out for a little bit. But if I put 1 micro in here, then I can slowly pyramid into it as price gives me more information. I've done that plenty of times last year where I really did like that entry style or pattern. There's a lot going on in here. Try not to make it too cluttered. I think if we took this away, see this imbalance here. Well, we get up above this imbalance. If we get above this high in here, what would this pattern be? That would be a bullish breaker. But the fact that we're getting up, if we close above this imbalance as well, it's really showing you, again, that's aligning with what I was already believing was going to happen. So new day opening gap in there, previous new week opening gap, this one here. Am I still favoring longs? Yes. I will not give up the liquidity void until if we traded underneath this low in here. But I don't know, based off of what we've had today, it's maybe a little bit harder delivery into the afternoon. And this is, to me, like if you're looking at biases or a narrative on a higher time frame, that's what's going to keep you from taking shorts in here just off of sell side imbalances. You can't just look at a 1 minute chart and see sell side imbalances and just trade it. That's why models alone are useless. There's hundreds of models all the time printing, but if you don't know why it should react or why it should be trading towards something or the direction, the draw on liquidity, then it's useless. And of course, you're never going to get the narrative or the bias correct all the time. I'll sit on here till about 11 o'clock and then I'm gone. I mean, my morning was wrapped up 30 minutes into it. If I wasn't live streaming, I would have been gone. That's a good day. Does that count as a breakaway gap now? It could. Breakaway gaps are very sometimes subjective. They're hard to tell. But we're very close to it. I mean, we could still utilize, and we'll probably drop into that buy set and balance in this inversion. And to me, is this a decent model? Yes, but it's a lower probability model because you're trying to pick off a low. Do I understand that we're within a discount, right? We're within this discount from yesterday. From that low all the way up to that high, we're in a discount. But you're picking off the very low, or at least trying to pick off the low. If I had to suggest something, especially for those who keep trying to do this, is wait for that reaction. Wait for that first displacement higher away from this order flow. If you wait for this, trust me, price is not just going to leave you. If you wait for something like this and you wait for, this second leg up, you're going to find yourself having a lot easier time. And even if you want to be super secure, again, our draw on liquidity, if this is to come into fruition, is all the way up here, above this high, up in that liquidity void. You could wait for all the way for price to be all the way up here and then pick a long. You don't need to pick off this low. But CJ, I'm going to miss out on profit. Well, you could also end up taking a bunch of losses, trying to be, a show off when you don't need to. And this thing could still keep going lower, and I could be wrong on that entire overall idea as well. That's what it protects you from. Yeah, I taught that last year. It was like the 75% rule, trying to pick off the last 25%, which I've changed different styles of trading, but it's still very valid. Somalia, please make a video about breakaway gaps, inversions, or guide me if you've done it. Yeah, I didn't want to do like those type of videos last year, but I definitely think I may make videos over. I'll probably end up producing like 25, 30 videos over like basically everything within ICT's concepts and try to make it in my version. I'm not going to say simpler because I think that's a lot of people are trying to look for an easy way out. But I'll make it into my version, what I interpret from it. The macro is going to be in about 10:50 right there. So about, what was that, 5 minutes. So again, in here, you see this model, the inversion of the buy side and balance. I mean, you could be trying to pick off the low in here. I mean, if it ends up playing out, it's going to be a beautiful entry. But again, on the flip side, there's a lot of anxiety and worry of, trying to pick off that low in here. It's, to me, again, if you want to solve that issue for me, is I'm putting the lowest amount of contract where it's the lowest amount of risk in here. Something like in here, I'd put 1 micro. And if price started to move in my favor and did the outline I just drew, then I would start adding into the position. Because this thing could still very well roll off lower. And then, I have a full contract size on a full position where I don't really need to take that much risk. Hopefully it makes sense. I know for those who've seen it, it makes sense. If we can get this to 150 likes, I would really appreciate it. So if this is truly going to see really higher prices for the rest of the day, I mean, we should see this support it. Not sure if anybody asked or mind how much percent you think is good. I think anywhere between 3 to 6% is fine enough. Even 2% a month. It depends on the account size that you're dealing with. But I mean, let's just say for an example, you have a $100,000 account. I mean, If you do 2% a month on that, that's $2,000. Exactly, Jafar. It depends on your account size, but I mean, it really shouldn't. Just because you have a lower account size shouldn't mean you're trying to push for more just to make more money. Because you're going to end up risking a lot more or over trading. I mean, you should always be in the mindset of, if I had $1 million account, how would I be treating this? You should be risking. I mean, you could be risking 0.5%, 1%, and aiming for on each trade 2%, 1%. You could do 1-to-1s, 1-to-2s, 1-to-4s. I mean, every trade that I take, today I didn't know that this was going to turn, but I at least knew that I was going to end up with at least a 1-to-1. You should at least be aiming for a 1-to-1, at the very minimum. That's why I like partials, because sometimes price runs a lot further than what I'm thinking, and I can hold off on it, move, trail my stop. But what I'll say off of journaling is all my winners are way more than any of my losers are. They're in terms of risk reward. They are always at least double, or at least meeting the minimum of what my loss was. You can't really control RR at times. I mean, you can have a projection and be like, well, I'm aiming for 1-to-4, but sometimes price never reaches it. I mean, just is what it is. If you're worried about your risk to reward, well, your win rate, if you have a good win rate, that will solve it. And at the times that your win rate is suffering, then your risk to reward, as long as you are maintaining that, your risk to reward will solve your win rate. They both go hand in hand. Like you could be doing 1-to-1s all the time and have a killer win rate. You could also be having a terrible win rate, terrible month or a couple months, but your risk to reward is in check to where each win that you do have, it's covering up for those losses. So the times that you have really good risk to reward, RRs, and then you have a really good win rate, man, you're in season. You're checking all the boxes. Like something like this type of trade today, if I was able to do that maybe once or twice again, like let's say this was in the beginning of the week, and able to do that 2-3 times in a month, like 2 out of the 4 weeks, man, that makes up for any losses, and that's covered. I'm already in profit for that month. I'd have to really screw it up to be negative. Because even just with those partials, I mean, what was that trade? I mean, we took it in here up to that buy side. That was about 80 handles. And if that fully completed, that would have been 130 handles. I mean, each of my stop losses are about 20 handles to maybe 30. I mean, that would take 4 trades to basically diminish that entire trade. I mean, it's pretty hard at times to do. Pretty easy if you're on tilt, for sure. Just reading order flow in here. Again, after something like this where you've wiped both sides, I've made this clear. You've wiped this side and wiped this side with large expansions. It may go into a really tight consolidation or high resistance to delivery. And you've already seen it after that expansion. I mean, look at the delivery. It's not very clean. You take that on a prop account? Yes, I did. Well, it's a live account. So this down close candle here, we may trade off lower today. Again, that's the reason why I'm saying don't pick off lows or try to be an all-star. And if we do trade lower, then I was incorrect on the overall direction. And if I had to switch, I mean, we could look for the lows in here, but that's really not what I'm favoring today. And how would I be able to switch? Well, I'd have to be paying close attention to ES, and I'd obviously have to be watching NQ and what it's really trading towards. Because, again, we're still in a bullish market structure as far as this hourly time frame. Man, when is the day ICT is going to pop in here? When do you guys think that'll be? Never. I just might, Oki. So we're stabbing into the CE of the new week opening gap, or previous new week opening gap. If you look at that wick, wicks will act as gaps. So CE of that are a little bit deeper. Marius, I believe that's how you pronounce your name. Excuse me if I pronounced it wrong. You're not a showman, so probably never. Yeah. He didn't all last year, and we've only maintained basically 200 viewers this year. Still grateful, but last year I was like 1,000. If we break underneath this low, which it looks like we're probably going to, if we get underneath this low and get underneath the previous new week opening gap and utilize it as resistance, then it may want to send it into these relative equal lows, maybe. But I'm not going to force that idea. I mean, obviously we're already done, but as far as reading it. I know some people are probably sitting here like, well, there was a bullish model and you said to take it. No. We talked about letting that play out. What is that? That's a prime example of if you're trying to pick off a low, again, that's being wrong on analysis, and you see a model, you don't need to pick off that low. Wait for that second displacement. And even if you're really eager and tempted to, put the lowest amount of contract size in, and then if it starts to move in your favor, then you pyramid. It never moved in your favor, so there's no reason to ever pyramid into it. And see how that type of execution mindset will help you. But I could have shorted it. It's like, well, yeah, you could have done anything, but that wasn't the bias. That's not what I was thinking. So obviously, at this point, it's really proving itself that we may want to seek these lows. I wouldn't say just yet. ES would be a huge help in here. Seeing ES trade lower alongside NQ and trying to seek its FOMC lows would be a huge help. And let's say we run down to these relative equal lows, what would be the model used? Well, it'd basically just be a continuation pattern. You'd be looking for inefficiency basically within a 1 minute premium. Or you'd be looking for a 5 minute. Let's say we close here, there's this inefficiency, we stab up into it, then we probably utilize it to send it lower. Anytime you get underneath the opening range gap, you can also utilize that as basically like an inversion for value gap. Is if we close beneath this, then and price retraces back up into it, you want to see it act as a resistance. Paul, I know you don't trade gold, but man, today was just amazing how far it went. And take a look. Let me see. I haven't looked at gold in years, to be honest. What is it? USD. Is gold at an all-time high as well? It looks like it. Get the gold bars. Hoard them. That's crazy. If you want to trade gold futures, GC is gold futures contract. So that's gold futures. Gotta go. Thanks for the stream. Of course, Hank. Yeah, I'm probably going to log off here. I've had a fun day. I think it was productive, and it's probably going to be it for me today. Based off of what we're doing in here, we may want to seek these lows from yesterday, the FOMC lows, because we're not respecting anything as far as bullish, and as soon as we broke through this previous new week opening gap, that kind of shows its hand. So that is more than likely the draw for the day. If you look at the 15-minute, this would be your bearish breaker there. We traced up into it. Now we're seeing this expansion lower. So that's going to be it for me today, guys. I'll catch you all tomorrow for the last day of the week. So till then, enjoy your day. Peace out.